Good morning, afternoon, evening, whenever you guys are watching. Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you informed on what's going on in the crypto space. And yeah, it's a lot of stablecoin news today. Not so much Bitcoin, yet we do have one Indian company becoming the first public company to have a Bitcoin treasury. So again, hundreds, thousands of companies are adopting a Bitcoin strategy and holding it in reserve. So that's just going to be the daily news we're going to be continuously getting on, and hopefully we'll start getting more news on just how scarce Bitcoin is now, because it's like, oh, too many people were buying in, now it's hard to get. So we got that going on. We got some more bullish news for Bitcoin, because also Tether minted another $1 billion worth of its stablecoin USDT. And usually when we see a news article about that, of how Tether minted more coins, that's usually very bullish, and we see Bitcoin's price go up. So we got that to cover. We got more details on that JP Morgan D coin that we talked about yesterday. And I guess it's more for deposits, keeping track of, because we're just worried. It's like going, is this a stable coin? What is this? So we got more information on that too. And lastly, we've got pudgy penguins and some good news there with gaming. So let's dive into the news and cover what's going on in the space. So first up, we're going to talk about the Genius Act can make stable coins part of the U.S. financial infrastructure, since it did just pass the Senate yesterday. Now, the Genius Act is one step closer to becoming law, in a development that may make stablecoin issuers key players in the U.S. economy. Now, stablecoin adoption among United States banks and financial institutions may accelerate following the passage of new legislation in the Senate. Now, the guiding and establishing the National Innovation for Stablecoins, or Genius Act as it's abbreviated, passed the U.S. Senate in a 68-30 vote on Tuesday. Now, Cointelegraph reported that the bill aims to set clear rules for stablecoin collateralization and mandate compliance with the anti-money laundering laws. It will now advance to the House, and the Senate vote sends a strong positive signal to institutions that bring the bill one step closer to becoming law, according to Caitlin Tishazer, head of the investment research at Digital Assessment Bank. Now, numerous large banks and traditional financial institutions are planning stablecoin integration for payments and settlements. Tishazer told Cointelegraph that clear regulatory frameworks and compliance pathways are a necessity as a legal recognition of stablecoins as a settlement of instructions, or as a settlement of instruments out there. However, she did say that the institutional stablecoin use may initially be limited to token issued on private blockchains alone. Now, here's an image of that vote in the Senate from the yay 68 and 30 nays out there. So, woo, very nice. Now, emerging crypto policy developments and stablecoin regulations are significant catalysts to the 2025 crypto market cycle. Alice Lee, investment partner and head of US crypto venture capital firm Foresight Ventures, told Cointelegraph that during the chain reaction and the X Spaces show on June 3rd, one of the strongest drivers is definitely the policy change, she said, referencing U.S. President Donald Trump's Bitcoin reserve approval and stablecoin policy development as the main catalyst for Bitcoin's price upside in 2025. And yeah, speaking of catalysts, like usually our crypto and Bitcoin catalysts were the Bitcoin halving that took place every 4 years or every 210,000 blocks on the Bitcoin blockchain. That used to be our catalyst for the bull run, markets to go, but since 2024 started, we got the Bitcoin ETFs, which was an early catalyst point. Then we got the Bitcoin happening like usual for another catalyst of bullish news. Then we got President Trump's election in November for another bullish sign. And now we're getting the Genius Act, and also all these companies out there is totally just catalyst for the price of Bitcoin and where it could go. But the Genius Act makes stablecoin issuers key players. Now, full congressional approval of the Genius Act will make stablecoins part of the U.S. financial infrastructure, said Andre Gravich, managing partner at Falcon Finance and DWF Labs. Now, if the issuers start holding large amounts of treasuries, that changes their role from niche instruments to key players in the economy, said Gravich. Now, he also added that the treasury-backed stablecoin would give institutions more confidence in using them for settlements and repayments. Now, financial institutions using stablecoins have been operating under a regulatory gray area so far, with few concrete moves being made due to the lack of clarity and government guidance. But according to Alex Bellew, co-founder of Rails, the blockchain for banks working with JP Morgan's Connexy's blockchain infrastructure solution, he said that now that this is done, institutions won't hesitate to jump, capitalize on the opportunities that stablecoins have to offer, and particularly when it comes to cross-border payments, the 24/7 settlements, and enhancing the global on-chain liquidity, like they're just going to jump on, and that's what Bellew told Cointelegraph. But on June 15th, investment bank giant JP Morgan Chase filed a new U.S. trademark application for the JPMD, amplifying speculation of stablecoin offerings. Now, the following listed services include digital asset trading transfers, exchange clearing, and payment processes. So, yeah, I was going to save that JP Morgan article for after the $1 billion Tether mint. We'll probably go straight into that next up. But no, it's like this is definitely a catalyst point in the crypto space. So I don't think we're going to see a bear market coming at the end of the year, how people expect it to be. I just think we're going to keep on going slowly but surely and just head straight into our new financial system. So that's our Genius Act move. I'll keep you guys still informed on where we head as we head to the House next, and then presidential signature going into law. So we'll keep you posted on that. But now let's talk about this JP Morgan dollar deposit token. So yeah, he took the trademark yesterday of JPMD token, and now we're getting more info on it. So here we go. So the JP Morgan launches a JPMD token pilot on Coinbase's Base chain, exploring blockchain-based dollar deposits for faster programmable finance. So JP Morgan embraces blockchain with JPMD's launch. In a bold step into the blockchain-based finance, JP Morgan is launching a pilot for the JPMD, a dollar deposit token on Coinbase's Base network. Now, this marks a significant move by a traditional banking giant into the on-chain world, signaling a shift in how financial institutions approach blockchain settlements. Now, why did JPMD on Base matter? Well, it's programmable dollar infrastructure. So unlike stablecoins or CBDCs, JPMD tokens are linked directly to the commercial bank deposits, and this allows businesses to program logic into transactions, streamlining tasks like payroll, supplier payments, and cross-border payments. They also, too, chose Base's blockchain as a launchpad. By using Coinbase's Layer 2 network Base, JP Morgan is integrating its assets with Ethereum's ecosystem while benefiting from faster, cheaper transactions compared to the Layer 1 Ethereum is. Now, this hybrid approach may offer compliance, speed, and access to DeFi tooling. And then also they use Base because they are working with real-world assets and how it meets DeFi. So JPMD could enable the tokenization of real-world assets and improve DeFi's credibility by backing it with bank-grade dollars. It's a bridge between legacy finance and the decentralized economy. Now, there has been compliance and adoption potential with this. JP Morgan's focus on the compliant regulatory infrastructure ensures that tokens like JPM can satisfy the Know Your Customer and anti-money laundering laws out there and other legal standards. Now, if successful, this pilot could lead to broader adoption by other institutions and open new channels for tokenized bank services. And here is that tweet from Cointelegraph showcasing JP Morgan launching their pilot on Base Network. Now, the final thoughts. The launch of the JPMD on Coinbase's Base network underscores JP Morgan's confidence in blockchain's potential for real-world finance. Even if proven successful, deposit tokens may become a new standard for on-chain money, merging the traditional banking stability with the innovation of Web3. So this is kind of like a step pilot program to see how institutions are just going to start jumping on board because, yeah, they can easily onboard Bitcoin and everything, but I'm sure they want more control over the tokens and the creations out there, and they can't do that with Bitcoin. So this could be a little tester for other institutions and banks out there, and just they're going to see how this works out, and they go, hey, JP, mind telling us how you did this so they can do it too. So that's JP Morgan's test dollar and what it actually is doing right now. Now let's move on to our ad on how Tether minted 1 billion tokens on, was this Tron's network? Yes, it was. And this is usually very bullish for Bitcoin's price. So Bitcoin's price often reacts positively to large-sized Tether mints, and plus the FOMC meeting result could fuel the Bitcoin and Ethereum rally. So Tether just minted $1 billion of USDT today as the crypto market witnessed turmoil with the FOMC. And why is it doing that? Boom. In case you guys were getting glitchy, I'll change that for you. But Tether minted $1 billion of USDT today as the crypto market witnesses turmoil with the FOMC meeting and the ongoing geopolitical issue. Now, with $1 billion worth of liquidity entering the market, investors anticipate positive results on the cryptocurrency prices. Interestingly, experts also highlight that this event could influence Bitcoin and ETH prices. And why? Well, let's discuss that. So why did Tether mint 1 billion USDT? Well, alerts posted on X that revealed that Tether's minted 1 billion USDT on Ethereum on June 18th. This part of USDT's issuer a broader plan and has increased its stablecoin total supply. Now here's the transaction ID. So again, everything is on chain. It's viewable. If you see a transaction, you can view it. It's a transparent ledger. It's a transparent blockchain. We can see everything going on. So here is how we know 1 billion tokens were minted. Now, since November 6, 17 billion USDT have been minted on Ethereum and Tron and aims to provide additional liquidity in the crypto market. Now, further reports also reveal that out of these 1 billion tokens, 225.36 million is being sent to Bitfinex, a Tether affiliated exchange. Now, BTC's price historical correlation to the USDT mining. Now, look on chain X posts and historical data shows that Bitcoin has reacted bullishly to USDT minting news. On May 21st, Tether minted $2 billion, and just a day after that, Bitcoin price hit a new all-time high past the $111,000 mark. Now here is Look On Chain's tweet about that, saying Tether just minted 1 billion. The last 2 times Tether minted it, it pumped Bitcoin. So will it pump again this time? I believe so. Now, Blockchain Research Lab finding also revealed that Bitcoin tends to rise at least 0.4 to 0.8% right after the minting. Now, this surge is due to its impact on investors, sentiments, and FOMO building due to liquidity changes. Now, will Bitcoin and Ethereum price rally next? Well, Bitcoin and Ethereum tokens prices are struggling amid the broader crypto market correction. BTC is currently trading at $105,000, whereas Ethereum is down to $2,500, and this is fueled by the FOMC meeting and geopolitical tensions going on because we got Israel and Iran and everything else going on. But although experts predict that the Fed would keep the interest rates unchanged, there is a slight possibility that the BTC and ETH price could react positively. Here is that tweet from Ash Crypto. Reminder, the FOMC rate cut decision will happen today at 2 p.m. Eastern Time. There is a 99.9% probability of no rate cut at all, and at 2:30 p.m., the Powell press conference will start. Now, in the past week, the war situation has escalated along with oil prices, and this could cause a rise in inflation, and Powell will definitely address it. If he sounds dovish, BTC's V-shaped recovery will happen. And in case Powell thinks that inflation could spike a lot, markets will continue their downtrend. But moreover, the clarity on the Israel-Iran conflict could help. Besides, the minted Tether token also influences investors' sentiments. So if bullish momentum forms, the crypto market could see a significant uptrend. So we got a lot of bullish news coming along the way. So we just got to see how this plays out. Now let's take a quick break before we continue on with some more news articles. So be back in 1 second.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled B-I-T-C-O-I-N, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Ben Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around 94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Ben Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And yes, we got tons of programs that our club members should take advantage of while they can. Because if you want to check it out, go to Bitcoin or bbccprograms.com or check out bitcoinben.io. Both websites will take you to it, but this is the BBC Programs website. You can take a look at everything we have to offer here at the club, from our Home to HODL program to our no KYC Bitcoin purchases. We got the Bitcoin Beef Initiative, as well as Bitcoin mining. And if you don't have a Fold card yet, sign up for it. If you need to become a member, just scan that QR code right there. So tons of programs and stuff happening here at the clubs and just all around the world in the crypto space. So definitely check us out. And if you need help with just getting started in crypto, give us a call if you're here near Sarasota, Florida. I'm here to help you guys, so come on. Now let's continue on with the news and see what else is going on. So next up, we have Jet King Infotrain. This company becomes the first public company to hold Bitcoin as a treasury reserve. Like I said in the beginning, every single day we're going to be getting more and more articles of new companies having a Bitcoin treasury now. And this one's the first India public company. So let's hear a little bit about this. So the company allocated over 26% of its market cap into Bitcoin, seeking to boost shares prices in the long term. Now, Jet King Infotrain became India's first publicly traded company to adopt Bitcoin as a reserve asset for its treasury after purchasing 12 Bitcoin on December 9th. According to the firm's CEO, Avinash Bharani, now, the company's Bitcoin reserve is worth roughly $1.2 million at a $97,986 price per Bitcoin. And as of press time, according to Google Finance data, Jet King's Infotrain's market cap is nearly $4.5 million now, which means the firm's Bitcoin stash represents over 26% of its size. Now, in an interview with Bitcoin proponent Max Kaiser at the Bitcoin conference MENA in Abu Dhabi, Bharani stated that Jet King Infotrain's treasury would mix equities and Bitcoin to boost the company's price in the long term. He added that we are the first ones to do it, and we are kind of talking to the regulators to see how we can formalize it and make sure everything is within that spectrum. Now, Jet King Infotrain was created in 1947 under the name Jet King Electronics and offered trading of electronic goods in India and performing its initial public offering in 1986 on the Bombay Stock Exchange. Now, Live Mint data reveals that the company's profit for the first quarter was $366,520, followed by an operating income increase of nearly 39% over the quarters and 36% yearly. Now, the first publicly traded Indian company adding Bitcoin reserve news comes on the same day as MicroStrategy adding 21,550 more Bitcoin. Wait, did he? I did not see that news article pop up. So Sailor's still buying more, Strategy still buying more Bitcoin or adding to their stash. And as well as Bitcoin miner Riot Platforms unveiled plans to raise $500 million. So I guess I'm kind of missing those articles because maybe we just cover them so much. People are like, oh no, Sailor's adding more Bitcoin. Do we want to write another article about it? They're probably like, let's give it a week. He'll buy again. But this is the building blocks in India right now. Prominent crypto lawyer Surreal Desai is reportedly leading the Indian company's discussion with regulators. Desai was also involved with India-based exchange Unocoin and represented the firm when it filed a right to information request with the Reserve Bank of India in 2020, asking if banks could provide accounts to crypto firms. Now, his efforts culminated in the country's Supreme Court, ordering the central bank to lift a nearly 2-year ban on bank facilitating crypto transactions. After the RBI told the court there were no official restrictions on providing such services, Bharani waited on the decision. He said, I think it was really important because that started putting the building blocks for Bitcoin and blockchain, and they also fought the RBI in terms of getting the whole regulatory ban lifted. So now people can hold Bitcoin on their balance sheets legally. He also highlighted that tax reporting is still a work in progress, as the tax for Bitcoin gains in India is 30%. So yeah, this India has never been the best place for crypto taxation, but as he just said, it's still in the works. We are building the blocks right now, but they have. It's crazy that they put in 26%. That's awesome. I love hearing that. Like maybe they'll do 50% next, because this is just a start. Like if they see like their stocks and price to go, they may start doing it, adding more. It's like, you know what? This worked the first time. It's working for all the other companies. Let's just make this all. Let's put it all in there. So that's our Jet King information on the first India public company out there to hold Bitcoin. And again, we'll be getting more and more news articles out there about just more companies, institutions adopting a treasury. Now let's move on to our next article on Pudgy Penguins debuts a play-to-win game on Tron. Now, or not Tron, Ton, the Telegram minigame channel, which they are still having 2.1 million wallets active on there. So yes, and Pudgy Penguins is cool. And like they did NFTs the right way. Like they are still around. When they were released, they sold like Pudgy Penguin like dolls at Walmart. So that was a cool little partnership they had there. And with those stuffed animals came an NFT with royalties to it. And now they can also use those NFT characters for in-game like character spaces and whatnot. So Pudgy Penguins just did it right when it came to NFTs. Instead of just creating an image, throwing it on the marketplace, hope people buy it. Oh, I get weekly royalties now from being the creator of it. It's like, no, don't do it that way. If you want to create an NFT in the space, follow Pudgy Penguins. Now let's go through this article and learn a little bit more about this game. So Pudgy Penguins is launching a skill-based Web3 game called Pengu Clash for the open network. Now blockchain, I hate why they put that little abbreviation there. So the open network blockchain, otherwise TOM. Now, joining the competitive minigame space, according to Pudgy Penguins, the game will operate under a play-to-win model, allowing players to compete and be rewarded for game mastery. Rather than speculation, the play-to-win, in essence, is a skill-based game. And the Pudgy Penguins CEO, Luca Netz, told Cointelegraph that users wager against one another versus the play-to-earn, in which you're earning tradable currency that the game provides. Now, this is a user versus user-based system, so the project said that the game will feature game models with different rules and objectives, along with the skill-based challenges. Now, Pudgy Penguins is developing Pengu Clash on the Ton blockchain, citing Telegram's large and distinct user base as a factor. According to Nets, the messaging platform has a whole different user base than we've had access to in the past, including users from Northern Europe and regions. Now, most platforms are not positioned for that type of gameplay. We'll see this as an opportunity to scale, he said. Now, Net sees the game as a vehicle to grow the Pudgy Penguins brand, with commercial gains considered as secondary outcome, and money is made, but that is a byproduct of our IP reaching the masses. Now, launched as a non-fungible token collection in 2021, Pudgy Penguins quickly gained popularity for its cartoon-style penguin avatars. The collection includes 8,888 unique NFTs on Ethereum's blockchain, with a total market capitalization near $200 million as of June 17th. Now, the project's plan to release more games in 2025. The next Pudgy Party is set for release in August. Now, Telegram Games promised Web3 adoption, and the Ton network has been exclusive blockchains for Telegram's mini app ecosystem since January. According to the Ton stat, the Ton blockchain has over 44 million active wallets. However, the network has seen a sharp decline in monthly activity wallets, which have dropped 82% since October 2024. Despite the decline in activity, it is still processing approximately 19,500 transactions per day. Now, Telegram Games reached a peak in 2024 with projects like Hamster Combat and Catison quickly reaching hundreds of thousands of players. So even though Ton is losing some, they still have a high number of active players. And I wonder if that's because of I remember they were really active, like what was it, a couple months ago, was it even a year ago? But you could use Ton and its native token out there for advertisements on Telegram's chain and like messaging app out there. So I wonder if that hype kind of died down. Most people didn't use it too much, so maybe that could have been it. But they still have a pretty active gaming universe out there. So if you're curious about play-to-earn games, maybe you want to check out the Pudgy Penguins game. It sounds pretty fun. Now let's move on to some serious notes just on keeping yourself safe in the crypto space. Looks like utilize the tools whenever they get provided to you just to keep yourself safe from any hacks, scams, or anything in crypto. And looks like CoinGecko launches a tool in preventing NFT users from rug pulls. So we were just talking about NFTs with Pudgy Penguin, so let's hear about this. So CoinGecko's terminal real-time DEX trading. So CoinGecko, a renowned on-chain platform allowing crypto users to view top cryptocurrencies and non-fungible token prices live, crypto and NFT charts, market capitalization, and trading volume, has launched a new tool allowing users to protect themselves from crypto and non-fungible tokens, as well as rug pulls. So in this article, we shall explore this new crypto and non-fungible token tool in detail. So CoinGecko launches the rug pull detector tool. In a June 18th blog post, CoinGecko's team confirmed through their Gecko terminal on X account that they have unveiled a tool helping crypto and non-fungible token users avoid becoming victims of a rug pull attack. Now, CoinGecko is a crypto data aggregator providing a fundamental analysis of the digital currency market. And in addition to tracking price, volume, and market cap, CoinGecko tracks community growth, open source code development, major events, and on-chain metrics. Now here is the tweet from the CoinGecko's terminal. Stop getting rug, guys, and do your research better. Here's how you can use bubble maps on CoinGecko to avoid the next rug pull. So bubble maps. I gotta take a look at that. So where would this be? Let's see. This is what it looks like. Fine. Let's just go to CoinGecko right now. Let's take a look at that. Let's see if it's on there. So let's go to CoinGecko. Here we go. CoinGecko. Let's see. Let's go there. And where would this project or platform be? What's it called again? Bubble Maps. So let's take a look at that. Let's go to the search. Bubble Maps. Will this pop us up in the terminal? CoinGecko terminal. BMD. Nope, it didn't do that. So I'm going to have to look at this and see where we can utilize that platform, and I'll show you guys later. Let's continue on with the news. So the CoinGecko team first announced the new anti-rug pull tool earlier this year, and a rug pull in the NFT space is a scam where developers abandon a project after attracting investments and often disappearing with all of the investor funds. Now this leaves investors with worthless tokens or coins and significant financial losses. Now, the term originates from the phrase pulling the rug out from under someone, leaving them stranded. Now, since 2021, evaluating the exact number of NFT coins launched is challenging, but estimates suggest that millions of new crypto tokens have been created, including many NFT-related ones, and reports indicate that the number of crypto and non-fungible token coins has significantly increased since 2021, with over 500,000 new tokens created in 2024 alone. Now, furthermore, the total number of crypto and NFT coins listed on the platform, like Gecko Terminal, has soared to over 7 million since 2021. And unfortunately, many crypto and NFT coins have gone to nearly zero value. And in most cases, most crypto and NFT projects founders appear genuine, but end up as a rug pulling investor who drain the funds. Now, in response to the rising rug pull incidents, Gecko Terminal has come up with a tool helping users detect potential rug pulls. Now, how does the rug pull detector tool operate? Well, CoinGecko team has launched a new dashboard tool allowing users to use bubble maps on the Gecko terminal to avoid the next rug pull. Bubble maps visualize token distribution and wallet connections, helping you to quickly spot supply concentration, wallet clusters, and suspicious activity on chain. Now, to access this tool, users must search for any token on Gecko's terminal and then click Bubble Maps tab. Oh, so it's that easy. All right, let's give that a try right now then. So any token. So let's see, what would be a good one to use? Let's do Fartcoin. That's always easy to do. So we click on Fartcoin, and then it said click on the bubble maps, or is it CoinGecko terminal? So Fartcoin Sol? No. Yeah, so it's kind of confusing. So bubble maps, search any token, then click on Bubble Maps tab. There is no Bubble Maps tab. I see CoinGecko terminal. So CoinGecko, you gotta get this fixed right now, or I'm just doing this wrong. But I guess that's what it is. So to search any token on Gecko, then click on the Bubbles tab, and it should take us here. Oh, there's a video. That would make it a lot easier to view. So let's see. So Bubble Maps. Oh, wait, which one is this one? So, this is so it's not on CoinGecko. This is Gecko Terminal. That's why I couldn't find it. So there we go. You search up the token like usual, and then boom, there's the bubble maps. So, okay, very interesting. Very, very interesting. Now, how does a healthy bubble map look like? Well, distributed tokens holding across many wallets. Now, there's no dominant clusters or whale concentrations, and organic scatter distribution patterns. So, in a healthy bubble map, users should take note of a well-distributed token holding across many wallets, no dominant clusters or whale concentrations, and an organic scattered distribution pattern. Now, on the other hand, red flags to watch for potential rug pull include large bubbles, more price control, potential coordination, crypto wallets behaviors, and uneven distribution with concentration. So I guess that's kind of like how the crypto bubbles map actually works out here. So like the bigger the bubble on this side showcases the more growth it was, but on Bevel's maps would be the bigger the bubble would showcase more of a concentration, like somebody holding a lot of that coin on there. So I guess that's what you would be looking for on that. But that's I guess a cool little coin Becco. Like, what was it again? Gecko terminal. I'm still trying to find that. Gecko terminal. Let's see. Can I find it? Okay, so here it is. Here it is, guys. So this is the right site. So it's not on CoinGecko. It's Gecko terminal. And then you can find any token on there. So there's Bub, a soul coin. You click on it and then boom, bubble maps right there. And now we can see the cluster of bubbles. Whoa, what just happened? There we go. Let's try it again. So here's our cluster. Oh, because it's not really doing too good because there's not too many coins. Probably a brand new coin out there. But oh well, that's pretty cool to do. I'll mess around with it later and whatnot. So that's our CoinGecko's new tool just to help you just avoid rug pull scams out there. Now let's go on to another problem out there. If you guys want a cold storage, not even a cold storage, if you want a hardware wallet, so either Trezor, Ledger, Bybit, Tangent wallet, whatever hardware wallet you want, here's a lesson to know. Buy from the official source itself. If you get it from Trezor, go to trezor.io. Ledger, I'm not sure what their actual official one is, but click on official links out there. Do not buy your wallet from Amazon, Walmart, eBay, Best Buy. No, you want as little hands touching that as possible, because if you do, someone could have tampered with that wallet, and then by the time you're loading up the Bitcoin, they have access to it. Whenever you load it up, it probably gets sent to their own wallet. And this is a lesson that could be learned from this gentleman who lost 50 million yuan in this type of theft. So here we go. Let's learn about this so that way you guys can stay safe. Now, here we go. So oh, how can I not read that? Scroll back. There we go. So introduction, a costly security crisis right now. In 2025, a case that shocked the cryptocurrency industry drew widespread attention as investors had 50 million yuan worth of crypto assets stolen from a cold wallet within just a few hours. According to the 23 PDS, the Chief Information Security Officer of blockchain security firm Slowmiss, the tragedy stemmed from a cold wallet the victim purchased via the Chinese social platform Douyin. Now, this wallet, marked as brand new and sealed, had its private keys compromised during initialization, leading to the swift theft and laundering of funds through the offshore platform Huang. Now, recovery seemed virtually impossible, and cold wallets have long been considered digital fortresses for securing your crypto assets. However, this incident exposed critical vulnerabilities in both supply chain and usage practices. It was not just personal financial catastrophes, it served as a wake-up call for the entire crypto ecosystem. Now, this article dives deep in the case, exposes the underbelly of the cold wallet market, and analyzes systematic security flaws, and offers practical strategies for investors to safeguard their digital wealth. Now, again, a big misconception out there, we covered this in our class last week on crypto wallets, is your crypto wallet doesn't officially hold your Bitcoin. Your Bitcoin in crypto isn't on that wallet. Your private keys are on it. Crypto lives on the blockchain out there, and your private keys is what gives you access to it to move it around to someone else's, say, wallet or let's picture the blockchain as a decentralized cloud locker system. You have the private key opens up your locker with all your crypto in it, and it allows you to move it into somebody else's with their public address. But yeah, so your crypto's not on your wallet. Some people think they have a cold wallet. It's like, oh, it's cold, it's safe, my crypto's safe on there. No, your crypto's not on there. It's on the blockchain. But every time you plug in that wallet into a device or anything, that could be that's already a vulnerability. You're just setting yourself up. So in order to be truly a cold wallet, like the best form is a paper wallet out there, because you just print up a wallet that you create. Well, you have your public address and your private key. You make that up offline, you print it up, boom. That is the official cold wallet because it is never connected online after that. But for all these hardware wallets out there, people have a big misconception thinking they are safe, but not. But let's continue on with this article, learn a little bit more about this. So, case reconstruction from trust to catastrophe in hours. So the origin of this case appears simple, but it was a meticulously crafted trap. The victim was drawn in by an ad on Doolin for a brand new sealed cold wallet offered at just a third of the price. So right there, they're trying to get you to get in on it at a low price. Oh, I'm going to buy lower. No, when this comes to your crypto and your finances, don't fall for a lower price. Like, don't be stingy or cringy on it. Like we here even have crypto only laptops from KX Solutions. Like, sure, they're just a little bit more than the average computer, but we have those properties in there to keep your crypto completely safe. So again, it's like, I'm just going to go get this one from Amazon, go to Best Buy. Oh, there's my crypto computer. No. So because it's cheaper, I'm saving money. No, don't try to save money when you're trying to protect your money. That's just really dumb. Now, the packaging looked authentic, and it even came with what appears to be an official certification. Now, lured by the low price and the blind trust in the cold wallet technology, the investor quickly made the purchase. Now, upon receiving the wallet, he followed the included instructions to initialize the device and generate a private key. Then he transferred his $50 million worth of yuan worth of assets into the unbeknownst known to him. The firmware had been preloaded with malicious code, so he didn't know about that after he did it. And the private key was transmitted to the attacker the moment it was generated. So within hours, the stolen assets were routed through several intermediary addresses and wandered via Huawei platform, disappearing into the digital abyss. Now, though technically simple, the attack was devastatingly effective. The hacker exploited the investor's misplaced trust and disregarded the secure sourcing, striking at the weakest link in the security chain, the supply chain. Now, the entire process unfolded like a textbook cybercrime case and exposed the myth that cold wallets are impenetrable. Worryingly, that this was not an isolated incident, but just the tip of the iceberg in an emerging wave of counterfeit cold wallet scams. Now, the dark side of the cold wallet market rise of a gray industry. Cold wallets, or hardware wallets known for their offline private key storages, are widely regarded as the safest way to store crypto. Brands like Ledger and Trezor dominate the markets thanks to their solid reputation, but I don't trust Ledger anymore. Just from news I've seen. However, their high prices and complex purchasing processes have pushed many novice investors to seek cheaper alternatives, opening the door to fraud. Now, a shadow industry built around counterfeit cold wallets has quietly emerged, thriving particularly on short video platforms like Doolin and Kashao. As 23PD bluntly warned, 93% of brand new or flash sale cold wallets online are fake and often prompt us elaborate scams. So if you see a deal on a wallet, don't do it. Always buy just from the direct source. Now, these fake wallets are crafted with extreme cunning. Fraudsters mimic genuine packaging, anti-counterfeit labels, and manuals to create near-perfect replicas. Some come preloaded with fixed private keys. What looks like a new key generated during the setup is already in the hacker's hands. Others contain malicious firmware that secretly transmit private keys via hidden network features. Even the second-hand wallet market is riddled with danger. Scammers refurbish used devices with backdoor firmware and resell them as new. The short video platform provided fertile ground for these scams with low price bait, fake review videos, and fabricated customer feedback, creating an illusion of trust. Now, the victims are often crypto newbies, unaware of the cold wallets that are only secure when their entirely supply chain and usage process is trustworthy. Now, cold wallet security risks a test of technology and human behavior. The security of cold wallets hinges on the integrity of private key generation, storage, and usage, but every step is a potential point of failure. Private key generation is especially critical, yet counterfeit wallets often use weak random numbers to generators or fixed keys. Hackers might embed low entropy algorithms into the firmware to make key generations predictable, or hard code keys outright, controlling every move the user makes. Even more alarming, some fake wallets pretend to be offline devices, but secretly connect to the network via USB or hidden communication modules, sending the private keys in real time to the attacker. And then supply chain attacks are another serious concern. From manufacturing to shipping to retail, every link can be infiltrated. Genuine wallets may be swapped with fakes during transit, tamper evidence sealed compromised, or even manipulated during production. In 2020, Ledger suffered a database breach exposing customer information. Though it didn't directly lead to asset losses, It underscored the fragility of supply chain security. So these, like, the wallet wasn't hacked, but the people's like email list for who purchased the wallet got compromised, and then that exposed them to potential phishing attacks. So people would get fake emails from a fake ledger person saying, "Oh, your crypto is not safe. Here, download this wallet, move all your assets over, input your private key." So it was a human error that caused it. But with these types of data breaches that happen, that's what usually takes place. Now, user behavior is an equally critical factor. Even with legitimate wallets, carelessly handling can spell disaster. Many users photograph or upload seed phrases to cloud storages, making them easy targets. Again, never have a digital copy of that seed phrase. Only write it down, engrave it on a metal sheet, whatever you have to do, but never a digital copy. Now, others fall for fake websites, downloading malicious firmware, or entering keys into phishing pages, like I said, with the email phishing attack. So their data was hacked. They got who bought a ledger. They sent those people emails, try to get them to give up their seed phrase. Now, protection strategies. How do you secure your crypto assets? Well, get a crypto-only laptop from Calyx Solutions. There's one option. Let's see what this article has to say. So, faced with the murky cold wallet market and growing threats, investors must take proactive steps to protect their assets. Buy from official sources. Only purchase from brand websites like Ledger or Trezor, or from their authorized resellers. I wouldn't even do that. Only go for their official sites. Avoid deals on video platforms or third-party e-commerce sellers. Verify the device's integrity. Upon receipt, inspect the anti-tampering labels. Verify the device's serial number on the official website. Check that firmware has not been altered. Never buy secondhand wallets out there. Even seemingly new devices may have been backdoored. Secure initialization. Set up the wallet in a fully offline environment. After setup, use the manufacturer-provided tools to verify the firmware is authentic and up to date. Again, test for randomness. Reinitialize the wallet multiple times. Check for consistent seed generation patterns that may indicate manipulation. And again, protect your seed phrase. Write it down on paper, etch it on metal, store them in secure places. Watch out for phishing emails, links, anything out there. And then just stay informed. Watch my channel, watch Ben's channel. Just stay informed of what's going on in the space so you do not fall for these scams. So that is it for the news. I hope you guys learned something. Hope you guys stay safe in the crypto market. Bitcoin's price is currently at 1045 right now. So again, we're still waiting to see this USDT minting and also the Genius Act bill. I think we'll start seeing some bullish momentum like this week a little bit. I feel we're not going to pass the 110,000 mark, but I feel we're going to get there because of all this bullish news happening. But that's what I'm thinking is going to take place in this coming week. But again, you never know. Could dip a little bit more, which is a great buy entry. You may go high and then you're just happy. It's like, yeah. So whatever happens, I'm just happy I'm in the space. So everyone have an awesome Wednesday. Carl, thank you for tuning in. What's up, my brother? So everybody, thank you for tuning in. I will be back tomorrow at noon with some more crypto news for you. So take care. Peace. Love.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.